Hey, you there, welcome back to Risk v Reward. Today we're going to be talking about a trade that I have ongoing aftermarket right now. This is one of those trades that I called out based off the sympathy plays on HKD, and then we had a lot of short squeezing low float, low cap stocks that are actually squeezing a lot of shorts out right now. And this has kind of been the ongoing thing for the past couple of days. So we actually found one that's pretty cheap right now. It's very manageable. The spread is good. Price action is really good, and I'm seeing that it could be performing to some pretty extravagant prices here. This obviously is not financial advice. Please don't just ape into these trades. Please, 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 please don't ape into these trades. But without further ado, let's get right into it. So basically, we're in ILAG. Two reasons why I picked this trade. I picked this trade because of human psychology, and I picked this trade because of a sympathy play. So the sympathy play is basically working off of, a sector or some type of stock that ran and made every other stock run as well. So basically, you had HKD run at the beginning of this week, and it made a whole lot of low float, low cap stocks actually squeeze up and run out of nowhere. Okay, and a lot of these stocks are just crap stocks, to be honest. I don't even know what any of them do, but you have to trade the price action that is in front of you at this particular time and not try to just be speculative. Now, the second reason is human psychology. Everybody in the market wants to know what's the new HKD, because I feel like I missed out. We need to make a new HKD. So a lot of people, when they see stuff squeezing, they're gonna squeeze it as hard as they can. They're gonna buy, hit that buy button. The shorts, like myself, I'm a short trend trader, as you know, and I'm counter trend as well. Like myself, will get squeezed like I did all week, right? So I end up kind of breaking even on the week. I think this is my first red week in a while. But I'm kind of flat. Okay, so we're gonna talk about this trade. So first of all, I'm gonna give you guys my price. I'm in at $4.04. Okay, and I'm gonna tell you why I chose that price. So if you can look at it, this is today's action. This thing squoze is actually a real word, but this thing squoze from $2 all the way up to before the close at 383. So this thing got to 383. It fell off in the post market, and then in post market, this thing actually broke the $4 level. Right now, why is that important? Well, it's important because it's a psychological level. Right, $4 is a whole dollar level. So when you have small caps such as this one here, you will see that when a stock is really cheap like this one, you'll see that the psychological level is going to be a whole dollars, quarters, and half dollars, right? So you'll have quarter levels like 4.25, right? Half levels like 4.50, and then you have the whole dollar as in $4 to $5. You'll have that whole thing, right? So when you have that type of price action, you're expecting those levels to be a consolidation period, or some type of breakout, or something above those lines, right? Or a failure, right? So let's dive right into this, right? So it makes the 4 break. Here's $4. I have these alerts out so I won't have to pay attention to the trade, right? So this is $4 here. What happens is this thing runs over the $4 level, it comes back, and then it bounces up past this $4 level, goes to the next candle, consolidates, and holds over right at 4. This is not a coincidence. It's just psychological trading, and this is what happens when you have cheaper stocks. Okay, so just hold on tight with me. I'm explaining some more to you. So now the stock starts to go up. It's putting in lower highs, as you can see. They're putting in lower highs, and this is the 1-minute chart. So it's a little bit aggressive, but it's putting in lower highs, right? And it gets up, it blows past this level, comes back down. Where does it consolidate? If we look all the way over here at the price action over here on this side, well, it consolidated around 425, right? Because why? It's a psychological level. People are expecting that thing to hold, be a breakout, or hold above that price. Now, check this out. this thing comes back. It starts to whip around a little bit. This is still, but it's still consolidating over this 425 level, right? It never spent like more than a minute below, right? And as we're speaking, it's going up, and I'm gonna show you why. Um, so it holds this, consolidates in this level, and then guess what? Guess where it goes to, right? This is the 450 level right here. This is 450. It's breaking out this 450 and it's running, right? Now, will it fail? We don't know yet because it's still running, right? So that's basically the whole dollar, the quarter, the half dollar. It's doing it. My next level is 475. Now, if it runs 475 completely over and goes to 475, you expecting it to be consolidation. Now, if it's probably going to run 5 over, and let me explain to you why. All right, so we look at the hour chart, so I can use this to kind of backpedal. This was the line in the sand right at here at $4 rejection, $4 rejection right here around these levels, right? You had like the little 450 area that it struggled at, right? The next stop that it can actually take right now is somewhere around 550, $6. That's the next target I'm expecting. I bought this thing with expectations of it getting all the way to about $556. That was my expectation to buy this, right? And the reason that I pretty much figured once it got over 4 and consolidating that we was going to have a breakout is because this is just human psychology, and we tend to repeat ourselves as humans and trade off patterns. Let me show you what I'm talking about with that, right? So if we jump over to AMTD, which is one that I actually called out for you guys on August 1st, was a sympathy play to HKD. They're basically the same company. This company has like so many shares of HKD, etc., etc. While I was making this video, around the $2 area. I was making it around here, right? So what is this? This thing goes all the way from 150 up to 225. It rejects, and then aftermarket comes in. It holds above this $2 range, right? So now you see $2 consolidating. What is it? Quarter and a whole dollar, right? So then this thing breaks over the 225 level. It breaks all the way up to the next level, $3, right? So it struggled a little bit here at 250 and consolidated here over this 250 range, but ultimately stayed in between $3 and 250, right? So these are psychological things. So now you get this consolidation after market. It goes sideways. Guess what? It breaks out that 325 level. It breaks. It goes up to $4. How did I know, right? And then it consolidates right here around $4. Under $4, stays above 350, right? Breaks it right out. What's the next level it goes to? 75. Consolidates, breaks out, goes to $7. I mean $6.50, right? And rejects the $6.50 mark, and then it comes back down to this 450 area, 475 area, stuff like that, right? This 450 area, and consolidates. This is the type of trades that is getting put in, right? So this is what I'm expecting from ILAG here, right? It's the same type of psychological trade. Everybody wants the new HKD. Everybody wants, where's the new HKD? Which one of these are going to be the new HKD? Everybody wants to know, right? So now we're consolidating above, we're probably, as long as we stay above this 450 range, we're fine. We did have a little bit of trouble right here at 475. We're having a little bit of a fight, right? But this is to be expected. So guess what I'm gonna do? I'm gonna go ahead and move my alert up because I have to keep monitoring this. If I'm in the post market, I'm in the aftermarket, you cannot set a stop. I can't put a physical stop out, so I have to have a mental stop, and I actually have to physically do it myself. So I'm thinking once it breaks 75, we should break 75 here pretty quickly, I feel. And then the next level above this is probably somewhere around 550. It's really going to be that struggling area if we don't break past it today, right? So that's just my guess. But this is the reason I took this trade on. This is more manageable. So when you talk to me about, I got a lot of comments of people saying, "Oh, scared money doesn't make money from HKD. Scared money doesn't make money, and oh, this didn't age well." Well, if you take a look at HKD today, what is it doing? It's down. How many? It's down $1,000, $2,000 from where it was, and still got a hundred and something dollar spread. Like, I'm like, this is not tradable. I actually heard of people actually having exactly $2,500 top, and they're stuck in this, and they don't know what to do. It's not funny, because this is how you blow your account. You don't gamble. Okay, scared money doesn't make money. You find opportunity that has manageable risk. We're traders. We are not gamblers. If you want to be a gamble, go play blackjack at the casino if you want to gamble. It's that simple, right? If you really wanted to gamble your money away, go to the casino, play blackjack, play Russian roulette, whatever you want to play, and don't try to take these manageable risks, because these are manageable risks, right? And it's not a gamble. All right, so that's all I have for you today. If you have any questions, comments, concerns, drop it down in the comment section below. If you're curious to how this trade is going to turn out, I'm going to try to update y'all guys in the comment section below, or you can just ask me. Hit me on social media, Big Hat Stocks. And with that being said, I will see you in the next one.